Welcome Investorholics and friends, this is KrackTheSky Value Investing. This is our inaugural ETF overview. The date today is the 21st of the 4th, 2020. We're going to be taking a deep dive into OOO, which is the BetaShares Crude Oil Index ETF. This one's currency hedge synthetic. There's been quite a lot of interest regarding oil in the last few days, so I thought I'd update this one and take it a little bit further. So hang around and hopefully it's worthwhile and add some value. Hey there Investorholics, it's Scott. My mission is to give you the knowledge and confidence to take control of your personal finances. So hang around. Let's have some fun because I want to crack your financial sky wide open and make it rain money. So KrackTheSky Value Investing will give you up-to-date investing knowledge and news, and hopefully it helps you navigate the markets anywhere you are. Okay, let's take a dive now into the BetaShares Crude Oil Index ETF. Aims to provide investors a simple way to take a view or a position on oil. Should track the index. Provides exposure to crude oil futures with currency hedge against movements in the Australian/US dollar exchange rate. So you can access performance of crude oil futures simply by buying the ETF. It's pretty convenient, and you can avoid all the complexity and the costs of directly buying futures in physical commodities. Reduce currency risk. 100% backed by cash held by a third-party custodian, so you shouldn't be left in the cold too much on this one. Portfolio diversification, so commodities historically have a low correlation to other asset classes. Liquidity, you can trade this on the ASX just as you would trade any other normal share. Okay, last trade was $4.24. Net asset value is $4.16. Very high management costs. I wouldn't typically be interested in something with such high management costs. Distribution frequency looks like to be annual. Quite a high dividend yield, 20.6% on a check last. I tried to calculate it, but I couldn't get to those numbers, but I may be missing something. Just something to keep an eye on. This ETF could be for investors who want exposure to oil sector, but don't want the hassle of having to actually go and do all the analysis on oil companies and also the crude oil. ETF might be a good tool to have in your toolkit if you want to build exposure to commodities. There's definitely other ways to build exposure to commodities that I think are better. There's different commodity baskets that you can have a look at, but definitely take a look at some of the gold ones. I think are probably a little bit better at this point in time. So have a look at QAG and PMGOLD. So as you can see from the graph, there's been quite a steep drop off in the value of the ETF since January. I did my last review about 12 months ago, so that's kind of why I've shown you that sort of 12-month snapshot there. And when I did that review, the price was about $14.45, I think, from memory. So with all the turmoil in the oil markets, I just don't see how or why, in fact, you actually want to be investing in something like oil at the moment. But anyway, each their own. You may have some type of strategy, but I don't think using this ETF would be one of those anyway. But just a little bit of background. So the price of oil futures contracts is not the same as the spot price of oil. As such, OOO does not aim to or should not be expected to provide the same return as the performance of the spot price. The performance of the ETF that is linked to oil futures may be materially different to the performance of the spot price of oil itself. This is because the process of rolling from one futures contract to the next to maintain the investment exposure can result in either a cost or benefit to the fund affecting returns. So what happens is they have to buy in and sell out to keep their futures. So they'll obviously they're selling out ahead of time, buying and selling out ahead of time before the month comes up. So typically they'll sell out the month before. I mean, you can see over the last couple of days, this is how people have actually got into quite a bit of trouble. They've got stuck with contracts. So, you know, to me, I mean, in my last review, I don't really like hedged ETFs, and also this is synthetic. I don't really like synthetic ETFs at all. So for me, this is not something I'd be really interested in, even though looks like there's quite a high dividend and those type of things. But I think it's something to be very, very cautious about. Hey there, Investorholics, this is Scott again. Are you interested in learning more about personal finances and investing in the markets? If you are, then smash the like button and the subscribe, and also have a look at the bell after you subscribe. Give that one a jingle, because that will actually let you know when I've posted a new video. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Let's expand your investment horizon, crack your financial sky, and let it rain your personal prosperity. Thanks, guys. Hopefully I'm adding some value. Great to hang around to the end of the video. Peace. Love you guys. Ciao.